Hello everyone. This is the pre-market report video for today, April 19th in the Indian stock market in terms of Nifty and Bank Nifty. I don't know why or how, but for some reason, yesterday for second consecutive day in a row, before 9 o'clock, yesterday's Nifty indicated a gap down opening. Still during the pre-market and the opening time, it kind of rallied and made the Nifty to trade positive. It's really very weird. As I said, I don't know why. Anyway, yesterday Nifty opened a gap up of over 60 points, but within the next 60 minutes, it gradually lost all of its gains and even dropped more than 100 points. Following that, till 1 o'clock, it traded negative flat range. Then at 1 o'clock, there was a sudden huge selling in Bank Nifty, which in turn pushed the Nifty down to another 80 points. However, during the final 1.5 hour trading, it managed to recover some points. This unexpected sudden drop in Bank Nifty was more or less caused by Bloomberg's Twitter account, as they tweeted that the Indian government is considering to increase the capital gain tax. Then in the aftermarket hours, Indian Income Tax Department confirmed that there is no such proposal. But the damage was already done, and it's now created the doubt among the investors that there is a possibility that Indian government might increase the capital gain tax in the upcoming financial year, since neither the future market nor the exchange Nifty reacted positive to the clarification. Sector-wise, there was a selling in FMCG, power and infra, while pharma and realty increased over 1% each, where IT, PSU Bank and metal each closed up by 0.5%. The advanced decline ratio was more of 1.1:1, which means for every one stock decline, 1.1 stocks were advanced. So the overall market was kind of good. Still, yesterday too, FII net sold shares worth approximately 810 crore rupees and DII net bought shares worth approximately 400 crore rupees. It's just Indian market odd man out, since most of the Asian market and all four European major index opened and closed significantly positive. On the other hand, all three major index in the US market closed near absolute flat. I mean, it just reacted to the quarterly results, and the quarterly results were really mixed. For example, in banks, Bank of America beats the analyst estimation, so it traded near 1% positive, whereas the other major bank, Goldman Sachs, missed the estimation, so it turns negative 1%. So it's balanced each out. Thus, Dow Jones decreased very marginally of 0.03%, S&P 500 increased very marginally of 0.09%, and Nasdaq down by 0.04%. In case of tech stocks, Samsung device default search engine problem is still affecting negative on Google. If required, please pause it and have a look. It's to just result expectation impact, nothing more. And after the US market hours, Netflix released its quarterly results. Initially, they announced that they missed their subscription target, that they added only 17.5 lakh new subscribers against the expectation of 22 lakhs. In the post-market trading, this made the Netflix share to drop over 8% for minutes, but as soon as they released their plan that how they are going to implement in US about stopping the password sharing, it regained all its losses. Oil too traded in the same place as day before yesterday. At the time of this video, Brent crude oil trading near $85 per barrel and WTI crude oil trading near $81 per barrel. Regarding Indian areas in US market, it's too more of a balanced one. I mean, Infosys decreased by over 1.5%, whereas Wipro closed positive of over 1.5%. Similarly, ICICI Bank closed negative, still HDFC Bank closed positive. But unlike IT, in banks, ICICI is more negative than HDFC Bank positive. About exchange Nifty, at 3 am Indian Standard Time, it closed at 17,686. So for the moment, it's indicating the gap down opening of 25 points. Still, honestly, I have no idea about what causing the Indian market turn positive only during the pre-market and opening. Let's see, it will be more interesting if it happens similarly today. So this is what happened on global market. Now moving on to the sector specific. It's not just Infosys bad results that affects the whole IT sector. In addition to that, on Monday, Indian government lost the WTO trade dispute with Europe and Japan for importing the IT services and products that includes mobile phone and semiconductor to India. Now, yesterday, Indian government announced that they are planning to appeal against its WTO panel ruling. For the moment, it's just comforting news for the IT product manufacturers, but still the overall impact is negative since this might increase the foreign competition into the Indian market. As a summary, US market closed flat, but still there are some weakness in IT and SH Nifty indicating the 25 points gap down opening. Regarding banks, market is kind of waiting for ICICI Bank results. About Reliance, yesterday in the Indian market it lost over 1.5%, but in the European GDR it closed negative of just 0.4%. Here please note on Monday GDR closed positive of 1.5%. So here at present there is arbitrage opportunities. Then about the things to look out, today the earnings results of ICC Securities, Mastech and Tata Communications are due. And in terms of macro, during the market hours at 11:30, UK's inflation is due to release. Here, this is important since at present, UK is the only major country in G7 and OECD that got the inflation of over 10%. Then at 2:30 p.m., Europe's inflation is due to release. Here, the expectation is to come less than 7%. Finally, in the aftermarket hours, various US crude oil inventories and FOMC members' speech are the items we need to look out. Just for info, yesterday Chinese GDP grown by 4.5% and in comparison in the last quarter, it grown by just 2.9%. So Chinese growth is back on track. However, Europe's consumer sentiment again starts to deteriorate and US housing started to show some contraction. Coming to technical, on the daily chart, by combining last 3 days, Nifty forms a bearish 3 outside down candle formation. I mean, first a positive candle, followed by a deteriorate candle and then a decrease one, which is a completion of strong reliable bearish reversal formation. This suggests that we will be seeing more downtrend in the near future. However, Nifty managed to defend 17,600 for the second consecutive day. Technically, it shows the overlapping negative candles in the downside. The formation of such overlapping candles and lower shadows indicating the intent of bullishness trying to make a comeback in the market. So maybe we might see couple of more consolidation. But if it defends 17,550 through the week and Monday, then we might see market to resume its upside trend. Regarding moving average and technical indicator summary, on the daily chart for both Nifty and Bank Nifty, it's same as yesterday. 2 days back, Nifty broke the 5-day moving average, but it's still above 10, 20, 50 and 200 day. Thus, it's not a strong buy, but just a buy signal. Then about technical indicators, there is more number of indicators now are indicating buy signal, so it's a strong buy. RSI value still around 57. Anyway, it's too still a buy call. For Bank Nifty, at present it's trading above all of its day moving averages and almost all the technical indicators are indicating a buy call. So as a summary, in both cases, it's a strong buy signal. Regarding RSI for Bank Nifty, it's around 69. Moving on, from option change in open interest, there are some put options unwound at 17,700 to 17,800 and some new put options added at below 17,550. So 17,550 is the immediate support to look out. Just for info, more new call options were added at 17,700 and above. But from overall options open interest data, there are still significant put options at 17,700. So based on the opening, 17,700 will act as the resistance. I mean, if Nifty opens positive and sustains, then we might see some more addition of put options in 17,700. However, gap down opening might trigger the unwinding and will make the 17,700 as significant resistance. Anyway, 17,800 looks a solid resistance. Then for Bank Nifty, from change in open interest, almost no new one, neither new call option nor new put options were added below 42,100. However, more new call options added above 42,400. From overall options open interest data, 42,500 looks like the immediate hurdle and 41,500 looks like a good support. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.